Okay, there we go. So we have our playing field set, right? We understand how moving averages are calculated, which is great. That's the first step. And now I want to take you from that just fundamental basic understanding of what you already see. And I want to ask you a few questions to formulate your own understanding of moving averages. So, very simply, what does it mean when the price, so this is the price of an asset, right, versus the average price moves significantly higher? So what I'm asking here is, what does it mean, for instance, in an area like this, when price itself, so that would be the candles in front of you, moves in a way, so like let's say on this candle, where it's now above the other averages, or above, in this case, all the averages. What is that telling us? Well, very simply, what that's telling us, if you think about it from an order-based perspective, is that money is entering the market, right, to create those candles on a level that it wasn't entering the market prior. That's it, right? If the market's going sideways and doing nothing, and then all of a sudden you get a push that begins to make all the averages slope higher and move higher, what does that mean? That means that money had come in, some composite operator or the institutions had bought in such a large way that it basically displaced and created a new slice of price delivery that is different from what was happening. So true demand, as we can think about it that way, has begun to come into the market. And very simply, there are now participants and orders, and then you can see I kind of quoted this, demanding the price to go higher. Because ultimately, if price is moving higher, if the actual price of an asset's moving higher, and the moving averages are starting to slope upwards and moving upwards, what is that telling us? That means that money's coming in such a way that the participants of it are saying what? I want this thing to go higher. I am demanding this thing, I am buying this thing, and I'm doing it on a level that I wasn't doing it before. So I am now moving into a bullish market, for instance, in this exact case. Okay. And now we can take that to the next level, which is very simply that when the average of price, so again, same thing, the average of price, this would be the actual averages, begins to accelerate, right? So if the average of price is accelerating, being bought up a lot, and as a result, the averages begin to slope. So that means like the averages might have been doing something like this and they begin to slope upwards, right? So envision the fact that we might have a stale market or a stale sideways based move. So think about something like this, where you have like kind of stale sideways market, and all of a sudden, all three of those averages, like depending on which one you look at, black, the red, the black, the red, or the blue, they start sloping upwards, right? What is that, right? So if the average of price begins to accelerate, right, demanding the price to go higher, and the averages begin to slope higher, are the orders going to sustain the upward slope and the momentum for a full cycle? And this is exactly where the momentum cycle comes in. This is where that initial idea of if a cycle is going to play out and how we can label that cycle as it begins to play out, that's where this all comes from, right? Because what's happening is, as the market begins to accumulate, let's put it that way, as the market is accumulated and price begins to move higher, what's ultimately happening is new money's coming in a very large way, or old money that now wants to buy it is demanding this price to go higher. The averages begin to slope higher. In reference to the price, everything is sloping higher, which means there's clear demand. So the question now becomes, will this new input of demand lead to a cycle delivery, a momentum cycle, or lead to failure? And that's ultimately the game of trading. The game of trading is understanding that, hey, something has happened in this market. As it's happening, it's telling us a story of what this thing may want to do next. And as a result of that story being told, we follow through with that story until it is no longer clear. That's what trading is, right? So in the event that we do start that kind of move, right? So maybe something was going sideways and now it's starting to slope upwards and the price is moving upwards. It becomes a question of, are we going to sustain the slope upwards? Are we going to sustain the slope higher and the momentum for a full cycle, or a momentum cycle? Let me actually change that for you guys. But basically, are we going to sustain that now for a momentum cycle? Okay. Now, when prices, so this is again referring to candlesticks. This is referring to the actual candles, right? When prices themselves drop back down, so this means prices started moving, and then start to go sideways or come down slowly, right? When they start to drop back down to a rising average, so now imagine this is price, and then imagine you have averages following price, and price drops down to an average, right? And there's maybe another average here, and maybe you have the 5, like I drew it earlier, somewhere here, right? Maybe something like this. When price drops down to an average, okay, and it does so without much selling. So again, this is just using a theoretical right now. We're going to look at many examples, but what I mean by that is, if price comes up, it's coming up, whatever, it starts moving higher, and then it sells off, right? So something maybe like this, maybe something like this, right? And then it kind of creates like this little area, and this maybe happens on an MA, a moving average, like so. This is a good starting spot, right? Without much selling. Now, what I mean by that is, if we try to copy and paste this really quick and delete all of this shit here we are, right? Very simply, if a candle kind of came in like this, right, and maybe dropped down to an average here, this wouldn't mean much to me, right? This is just pure selling coming into the market, which means that prior demand is probably being eliminated. So again, think about this right here in reference to this image right above, which is that if prices, so the candles themselves, come back down to an average, so that could be the 10, maybe it's the 20, maybe it goes a little bit deeper like so, right? Maybe something like this, right? And it does so without much selling. So again, not insane selling, but steady inclination of selling. And then instead pauses cleanly, right? So pauses cleanly, so basically pausing without rather than distribute, so without distributing, so without just breaking down insanely, or just breaking down insanely and doing something crazy. What does that show us? What is the act of price doing something like this? Okay, so again, a quick example before we define it. Let's look at something that I've traded a few times now this year. But very simply, this is a good explanation right here, right? You have a market that moves higher and starts to slope the averages higher. And in the event that it begins to pause, and in our case, create a momentum MB. So now you can think back to the portal material that you've gone through on understanding accumulation MBs and momentum MBs. And you can start looking at some of the labels here, but I'm going to teach you and walk you through how to use labels and start labeling your charts. And price basically begins to sell off in no major way, starts going kind of sideways, if we were to think about it this way, to a rising average, in this case, this 10 / this 5. So it comes down to the 5 and this 10, and then there's a rising 20 just under it. When it does that without much selling, right, what is that showing us? Well, we can see what happens after. And before we actually define it, right, you can see what happens after. Then again, when price sells off without much selling, goes sideways on a rising 5 / 10, what happens? Then as price sells off slowly into the rising 5, 10, and 20, goes sideways, what happens? As price sells off and pauses and sells back down to a rising 5, 10, and 20, what happens? As price moves higher, so again, the same thing, as the averages are sloping upwards, which means that clear money is coming into this market in a large way, and then selling comes in, and the selling is gradual and slow, and it's coming to the rising 5, 10, and in this case, the rising 20. And then it goes, and then even most recently, the trade that I'm actually in currently as we speak, currently running about 14, 16 RR up on this, which is just insane, but moves higher, sells, pauses on a rising 5, just behind a rising 10, and the 20 coming up after it. What is that showing us? So when price moves and starts to slope and starts sloping the averages up, and then sells off, but sells off cleanly without distributing in a major way and just breaking down like out of nowhere, right? And that's happening. What is that showing us? Well, that is an indication. Here we go. I'll move that over. That is an indication that money. So you can think back to some of the older portal material concepts that you had went through. That's an indication that money is entering the market. That's what's happening, right? Those points as this happens, and it happens cleanly, is a direct indication that there is some level of institutional or composite operator or large money supporting the move that's happening. The buying that is coming in, the buying that is proven to come in, due to the change of what was already occurring. So you go from this to the big buying, everything starts sloping up. So clear money is coming in. And the fact that as clear money comes in and price pauses, it's unable to break back down. That is showing you that huge money is continuing to hold up the underlying strength of the market. So overall demand that's being validated, demand that's being created is continuously being held up and wants to be held up to go into new demand, to go into new stage twos. You get continuations from that. Those become those reaccumulations. Those are those momentum MBs that are made up of lower time frame accumulation MBs into momentum MBs because it's the same thing on repeat. And again, as it moves and pauses, it's bought up. It can't go lower. The sellers do not want to come into this market in a huge way, and the buyers don't want this thing going lower, so they continue to buy into it. It goes higher, and as it sells off, it gets rebought, and keeps going. Gets rebought and keeps going. Gets rebought as it comes lower and keeps going. As it pauses, it gets rebought, and as a result, I'm looking to enter through the systems that you've already learned and seen multiple times now to keep going. And hopefully this thing keeps going, right? You can see some of my expectations here. I would love to see this thing keep going. I have no idea what it's going to do, but that's what I want to see. So it's an indication that money is continuing to enter the market in a non-negative way, right? So it's continuing to enter the market in a positive feedback loop and in a positive way. And this, my friends, this my beautiful members, is why our higher time frame narratives, are built up around price moving into a momentum cycle. We'll call this the momentum cycle. I won't even have, there you go. This is why we call it the momentum cycle of the V and the C. Because ultimately what's happening, right, is momentum is continuing to sustain the underlying moves. And again, when I say higher time frame, the higher time frame narrative, remember that's referencing a V and a C of any given E. So, your V and C could be a low time frame, but it's a higher time frame based on the overall EVC that you're working with, okay? So this is that indication that money is continuing to enter the market. And that's what actually builds up these momentum cycles of the V and the C. So ultimately, right, if we were to just work through this very, very simply, let me delete everything here, and I'll show you another example before we move on to the next one, is very simply, right, price kind of flushes out, price starts creating the accumulation MBs. If you want to draw them, you have like kind of this, but basically you start creating accumulation MBs. Now, again, I have reasons that I draw them here or here, and it's to do with, the interaction of price with the averages, but ultimately you have the accumulation MBs that come out of an area that start to move higher. As the move begins to move higher, we assume we've entered likely a momentum cycle. So assuming that this is a V or a C, what we should be seeing, right, as per momentum MBs, is that price is going to move higher. It's going to pause on the 5, 10, or 20 averages of the validation and continue its move. And ultimately, that's what you see here, right? You see price start putting in momentum, and the next sell-off doesn't get sold off in a huge way. It gets rebought, and that rebuy is the accumulation MBs beginning to create new opportunities on a lower time frame that then move into momentum MBs. So again, if we think about the daily right now as the validation cycle, time frame cycle, what you're probably going to have is MB1, MB2, maybe a momentum MB here or here, and then price goes, right? And those can all act as opportunities, right? You start with a double MB always. The double MB starts forth the actual move, and then beyond that, you can have like a momentum MB, and then you have delivery of more momentum MBs. But the more momentum MBs that occur, the less likely you should be using that to actually get positioned into the market. So, sorry, I got a text. And then I'll show you one more example just to make this very, very clear. So again, this is on a V time frame in my case, right? But you can do this on anything, anywhere. Let's show NVIDIA here on the weekly, because I have this labeled a ton. And you're going to see the exact same thing. So if I go like anywhere in here, if I just go to, let's just go from here. This is fine, right? You're going to see the exact same thing. You're going to see price begin creating accumulation MBs and move higher. And this is also momentum MB here, but very simply, price moves higher. You begin to slope upwards in terms of the averages, which means that again, right? So walk yourself through the thought process and the why of why this works so well. When the average of price begins to accelerate, and slopes the averages, there are orders that start coming in to sustain the potential move. And based on how they sell down, we basically decide if that means that the validation cycle or the context cycle is going to continue through the momentum cycle, right? And we decide that we're going to either trade or we're not going to trade, right? Because money is now entering on a level that it wasn't prior. So participants or the composite operator is demanding the price to go higher. That's what you see here. An accumulation MB, a move higher, goes into a sideways market. That sideways market, look at this is a weekly chart, by the way, guys. The sideways market leads to a pause at the rising 5, 10, or 20, in this case, the 5 and the 10, the rising 5 here, moves higher beautifully, right? This is through overall demand validation, and all of this inside acts as what? Accumulation MBs, momentum MBs, and you have delivery, right? Moves higher. Then, as selling comes in, it's not drastic, it's not large. The selling comes in, and buyers are continuously stepping back in, which is why it's not selling off heavily. And price comes to the 5, the rising 10, the rising 20, and continues higher. Price then pauses for another momentum MB, which is going to be made up of what? MB1, MB2, momentum MB somewhere in there, momentum MB. Again, there's going to be plenty of that, and we can go and study that later. We're going to show more examples in a second. But those are creating those momentum MBs, and price moves higher. And price makes another pause. That pause is another momentum MB. That pause happens at a 5, rising 10, rising 20, and moves higher. And it keeps doing this, and in this case, it goes for much more than 4, which is the normal case that we look for, and that's perfectly fine. Markets can do that. If I was trading this market, just to give you all information, and this was my validation cycle, I myself would have probably started to ignore price inside of these points here. That's perfectly fine. And then what happens? Price goes into a distribution or breaks down initially, comes down into the averages or flushes down into the averages, breaks higher, creating a new accumulation MB. And we know that this should now lead to, or you can look at these as the accumulation MBs. But overall, I'm going to walk you through why I call like this area here is the accumulation. This is one way that I stay out of more chop and like stage ones. But ultimately, that creates an accumulation MB. Price moves higher. As price moves higher, what happens? Price moves higher, and not only does it move higher, but the slope of the averages continues to move higher. And what is that? That's an indication that the participants are demanding this thing to go higher. Now, the question becomes, is this going to set forth another momentum MB cycle where the participants are going to continue to buy up the averages? Are they going to continue to buy up the overall momentum and the cycle that is currently at hand? Price moves higher, price pauses. As it pauses, it doesn't sell off in a huge way. It pauses and gets bought up at the 5, the rising 10, rising 20, moves higher. It pauses. It gets bought up at the 5, the rising 10, the rising 20. It moves higher. It sells off. This initially was a very big sell, right? I would say this was quite a large sell, but then it kind of started going sideways inside of here without selling off much more. And again, where did that happen? At the 5, 10, and the rising 20. Price moves higher, creates a potential new momentum MB. And you can see here, it sells off very, very heavily, very big wick. I even kind of added that here. But nonetheless, this could have been a momentum MB where it was on the 5, rising 10, rising 20. And as the move kind of failed to go and went into this chop right here, there was nothing to do until it went back up. And as it went back up, so again, this is how I walk through. Also, this is exactly how I analyze any market on any given day, and how you'll see me analyze markets from now on within the webinars as you show up to them. And I walk you through exactly what I'm looking for on a given move, or why I'm looking for a trade, or why I took a trade. You're going to see exactly this represented over and over and over again. So again, confused right now, it's perfectly fine. It's going to become a lot easier, right? So price pauses again. Well, it distributes, then it reaccumulates, breaks higher, creates kind of this accumulation MB inside of this area, right? So this is, again, a flush into accumulation MB, which means that we are now potentially going into a momentum cycle. And what happens? Price moves higher, the averages start sloping higher. So again, what is that showing us? You should be now getting bored of me saying this, but okay. The price is going higher. The average of price is moving higher with the price. Money is entering the market like it wasn't prior. Participants are wanting this price to go higher. Since they're sloping, does that mean we want to continue the momentum MBs and the momentum cycle? Well, if price pauses and sells back, we want to see it get rebought at the rising averages, the 5, the 10, and the 20, exactly what I use. And we're going to walk through and talk about all of them and why it's the case, right? But what happens? Price then starts to sell off, doesn't sell off large in any way, pauses on the rising 5, 10, rising 20, and from that momentum MB, which we know is going to be made up of accumulation MBs into momentum MB, into momentum MB, into probably ignore because, that's how we get positioned, starts a move, maybe breaks even, probably breaks even or even gives you a little profit, re-breaks down, and then you kind of go into this chop, re-breaks accumulation MB. So again, starts another accumulation MB through the top. And what's the next step? This move higher is going to slope the averages higher, which is exactly what happens. If price now pauses or sells down to the averages and does so cleanly, which it does right here to the rising 5, 10, and 20, we expect this to start a new move higher, and it starts that move and it refails. So this is where even though you understand what a cycle should look like, it does not mean that the cycle has to deliver, that it's going to deliver. To be honest with all of you, if I had been trading this market, I'd very likely get positioned inside of here. Does that mean I take losses? No, not necessarily. The positions that I might be taking could have been in here, could have been multiple, because these dailies, because this would be a daily validation time frame, and that could lead to an entry somewhere in here on a lower time frame, and that could lead to a profit into a break even, or a small break even, or even in some cases a loss. Now, again, I want you to recognize that being right or wrong about the cycle is not necessarily important. What's important is what comes after. What's important is the execution that comes from the analysis, right? So that's very important to remember as well in your own trading. Price sells off, goes into full distribution. And in this case, we have the bearish side move, but we're going to ignore that right now. And then again, once again, we go into an accumulation MB. So this is one of those examples where we flush down. This is a full cycle of a higher time frame, create an MB1, MB2, or basically the accumulation MB. That's what I labeled right here. The accumulation MB starts to move higher and starts to do what? It starts to slope the averages higher with the move higher, which means that participants are now demanding this thing to go higher. As price sells and goes sideways, it does so on the rising 5, the rising 10, the rising 20, and creates a first momentum MB. And then that doesn't lead to anything. And once again, same thing. It breaks down and goes into a market that nothing can be done on. And once again, it creates an accumulation MB. That accumulation MB, or the initial move, leads to a rising 5, 10, 20. Then as price sells off, it does so in a clean and orderly manner, which means that the buyers that are coming in are supporting this move. The momentum MB begins to get validated through demand, which on a lower time frame, as we know, is going to be made up of double MBs and momentum MBs. That leads to a move higher, which creates sloping averages higher, which means participants are behind this, which means the next selling, which would be the momentum MB2, shouldn't be large. And as the selling comes in, right, it's a clean sell down into it to the rising 5, 10, rising 20, creating momentum MB, which leads to the creation of further lower time frame accumulation MBs into opportunities that lead higher, that lead higher. And again, this is a repetition of the exact same thing over and over and over and over again. And funny enough, as we follow this, you guys can pause this, you can take notes on this if you want, but we're going to go through more examples. You're going to see this in webinars. You're going to see this over and over again. As we get over here, this is personally a time I traded. We went into a flush, started building accumulation MBs. Remember this, which could act as an accumulation MB, acts as a momentum MB due to what you learned in the portal so far, which is that because this is considered a C or a V, those initial accumulation MBs now act as momentum MBs for a lower time frame. Price moves higher. The slopes of the averages begins to go higher. So there's demand coming into this in a large way. As price sells off, it does so cleanly, and it does so to the 5, the rising 10, the rising 20, and that leads to a momentum MB that delivers. And I'm going to be honest with everybody here. I got to remember where it was. I personally took trades, I believe, inside of here or here. Now, I played them pretty poorly in the way that I managed them. I still made a lot of money on them. but I played them pretty poorly. But nonetheless, right, what happened? Price went higher. As it began to sell off, it sold off slowly. We did have this big sell-off here, which is a little bit scary, but this came right into the 5, the 10, the rising 20, and it did so prior with pretty nice selling. And I think there was some relative strength here, which we'll talk about with you guys a little bit later. But nonetheless, sold off, began to pause. And those things, you can see I have some labels of the lower time from here. But again, that led to new accumulation MBs inside, which led to momentum MBs, which led to entries of delivery. And it's the exact same thing on repeat. And it's exactly what it's been doing over and over and over again. And currently, if you take a look, if I go like this and I remove the daily and I remove all of this just for a second, and we just keep the weekly base cycles on here, we have an accumulation MB after a flush out. That's starting to move higher. And what happened? Price has now started to sell off. But as it started to sell off, it's doing so in a way where it's slow, it's clean, it's consistent to a rising 5, 10, or 20. So again, the 5 might start coming down, but this is coming to the rising 10 and the rising 20, which means what? If we're watching this, the lower time frame should begin to do what? It should begin to create accumulation MBs, followed by momentum MBs, all of which will act as opportunities for a move. This is the same process I use for any asset and any time frame to decide if it's worth watching, if it's worth putting my risk on, and if it's worth continuing to watch on my watch list. So for instance, if I now drop down into the daily, right, which is exactly what we're doing right now, what is actually happening here? Well, you have a sell-off that is not clean, that is not orderly, and is very large. This is now acting as a flush on the daily. So now what do I wait for? Well, hopefully we see this maybe go sideways. That would be the flush. Go higher, which would be an accumulation MB. Pause, which would be a momentum MB. And from that momentum MB, when the averages are now sloping upwards and price is finding itself on sloping upwards of a 5, 10, or 20, a lower time frame. So think to your EVC and think to the fractals that you've already learned about and now understand. Think in this formula right here. As I step down into an entry time frame, what is that going to lead to? That's going to lead to, think about that circle I made before. That's going to lead to a flush into those higher time frame averages. That's going to lead to a accumulation MB or double MB, momentum MB, continuation. And if I go inside of these a little bit further, which would be the example of me using a 15-minute to also enter, what am I going to see? I'm going to see a mini flush into a MB1, double MB potentially, momentum MB, which might even line up with this double MB here, and that all acts as opportunities for a trade. Either the double MB on this time frame here, the double MB of this time frame here, potentially if that's happening, or even a momentum MB, the first momentum MB of this lower time frame that acts as a potential double MB or FFMB of the 65-minute. Again, that was a lot, very likely a lot, but I need you to understand this because this is exactly what's going to transform the way that you personally kind of draw out the map of what you're looking at. And it's going to give you confidence to start following things on your own because you know exactly where you might be in a move. And as a result, well, you know where you might be going, so you know what you're looking to follow. And this is exactly how I arrive at my ideas, at the markets I watch, and at everything else that you've seen thus far. Cool. See you in the next one.